let's analyze the Nvidia stock. After a long consideration, we are trending downwards. Also, I'll show you the volatility. Volatility spikes are crucial moments that occur on volumes. Currently in the stock market, we are experiencing very high volumes which will end this week. We'll also touch on 3D volatility. I'll definitely show you a foolproof strategy. As we can see, no matter which direction the stock moves, we can profit from it. But more on that later. Let's start from the very beginning of Nvidia stock. Over the past months, Nvidia stock has grown by 100%, a very, very strong growth, especially for a company that's worth several $1 trillion. Undoubtedly, the company is very profitable. By all metrics, there is significant growth. Net profits are up 125% in some areas, and revenue growth is up by 500% in certain metrics. But I believe that this growth may soon come to an end. In the last month, we've been in consolidation with levels at $850 and $950. Currently, we're trending back down to the $850 level. We've dipped below it, but haven't solidified our position below it yet. Let's move on to volatility. In fact, volatility will show us very important things. Implied volatility currently stands at 50% across all strikes. Volatility in Nvidia stock is very high. As we can see, the volatility smile is heavily skewed towards downside puts. Yes, towards upside calls, it's slightly increasing. Volatility is increasing at some strikes, particularly at nearer strikes. Overall, it's a flat line, but towards the downside, we see a significant rise in volatility. Regardless of expiration dates, whether it's May, June, or August, volatility is increasing across all months. Let's switch gears to current historical and implied volatility. The white line represents implied volatility, while the gray line represents historical volatility. I always tell you that one should profit not from the movement of the stock, but from the movement of volatility. Volatility always tends towards historical values. Based on this, we can build a sound options strategy that allows us to profit. Let's switch to options trading volume. A very important point. We have a very large volume concentrated at levels of $900, $870, and $850. This is regarding call options. Let's look at the options path. We have $800 and $850. I want to explain to you once again what delta neutral hedging is and why it's very important after a trader or investor buys a call option. On the other side, the market maker sells this call option to them to hedge their risks, as the market maker earns from spreads and commissions. They must buy as many shares as the delta indicates, and this is dynamic strategy. Therefore, when the price changes, they either buy or sell these shares. Therefore, all options that are in the money, they will have to sell all these shares they bought because there's nothing left to hedge. Therefore, this is how gamma squeezes happen. When a lot of call options are bought, the market maker starts hedging risks, buys the shares themselves. By doing so, they push the shares up, and they have to buy even more shares. It's a vicious circle. And this continues until a large investor sells their shares. As we can see, a large sale occurred on March 8th, and after that, the shares stalled. After that, the stock stopped growing. And it was, of course, related to options. As we can see, mostly all strikes are concentrated on this week and the next one. Certainly most strikes will be rolled over to the next week, meaning investors or traders are extending these options. But in any case, it's expensive. Buying call options is expensive at the moment. Therefore, money will eventually run out. That market makers bought to hedge their sold call options. They will have to sell all this hedge, and thus, the stock can drop very significantly. This could take a few weeks. We'll just be falling and falling. This is the most unpleasant. The question is when it will happen, whether it will be a massive market maker sell-off or not. Of course, it will depend on where the stock closes in the next week. I remind you of my philosophy. I don't know where the stock will go. I can't predict price movements. I always focus on sound position and portfolio management. Create a portfolio so that no matter where the stock goes, you make money. I always say that. What I'm saying about the possibility of the stock going down is purely hypothetical reasoning. I don't know where the stock will go. We also have mathematical expectations and mathematical profit. That means based on theory and probability, we can calculate that the risk-return ratio is not in favor of the investor. I'm saying this because the stock could rise to $950. Yes, but it could also fall to $700 and even to $600. I'm saying that the mathematical expectations are not in favor of the investor. That's the most important thing. If you trade according to mathematical expectation, you will always, absolutely always be in profit and never lose. Again, I believe that. Either the growth potential in this stock is already over or it's coming to an end. Again, before another rise, there should always be a correction. That is, the stock should dip to correct itself before continuing to rise again. And this correction could be very deep and very far. Again, this is my opinion. Let me show you the 3D volatility. Here, all volumes, all strikes, all dates, expirations are concentrated. Professionals will immediately understand what can be done here. And I will immediately show you the strategy that I developed using options. But again, under no circumstances should you follow this strategy, you will definitely lose money. I'm only showing how positions can be managed as we can see. With this strategy, if the stock continues to rise, we will profit. If the stock rises to $1,000, we will earn $13,000. If the stock falls to $700, we will still earn $7,000. That's what I always talk about. Adjust your portfolio so that no matter which direction the stock goes, you make money. That's the secret of successful traders who always make money. Again, this strategy requires management. You will need to close options and buy new ones because many options here are sold without coverage. If you buy and just leave this strategy, you will definitely lose money. It needs to be managed very seriously. I'm only demonstrating how it can look. Let's get back to the individual stocks. Again, the risk-return ratio is not in favor of the investor. I believe that. Naturally, my opinion is based on the volume of options. If the stock price closes below a certain level, there is a high probability that we will start to fall. Again, this is purely technical. So market makers will be closing their hedge and selling stocks. You might think AI, that it's the future and all that, but here it's purely a technical moment of selling stocks. Nothing more will work here. Also, I remind you that I want to launch a new experiment where I'll open a new account. When I receive monetization, I'll transfer all the money earned from the YouTube channel to the new account and will form a new portfolio from scratch. I'll show absolutely everything. Everything will be as real as possible. I'll actually buy stocks. Everything will be transparent to the maximum. I'll show how to manage positions wisely, which stocks I buy, how to build options properly. There will be a lot of information, educational information, how to correctly and wisely, solely from a mathematical point of view, compose your portfolio. Mathematics will work for us. Make sure to subscribe so you don't miss this experiment in real time. Let's get back. Here again, a very important point. We'll monitor how the week closes, how this day closes. If we start to fall, then the technical moment of selling these stocks will trigger. But I in no way urge anyone to sell these stocks without coverage. It's also very dangerous. Also, building some strategy through buying options is not the best option right now because options are very expensive at the moment. If you don't know and understand options, I would simply advise you to wait. Just watch what happens. You can't earn on everything, so you just need to see what's happening. Also, I advise you to watch this video. Here, I analyzed the Tesla stocks, what awaits it in the near future, what potential it has. Good luck to everyone.